Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium video. We're going to be doing more or less a comprehensive market update. I feel like there's a lot going on, not only in crypto, but also in the stock market. So I want to go through sort of where the market is, the risks involved, and what could be coming in the not so distant future. Let's go ahead and jump in. So I thought it'd be prudent to just give you guys an update on the Bitcoin dominance. Clearly it has been falling. We are below 50% now. If we go look at our Bitcoin dominance, whether we code it above or where we color it above the 20-week or below the 20-week, you can see that again. I mean, this is the prime time for the dominance to be in fact falling down. And when you look at the altcoin dominance, it looks a little bit more like what we would expect, a bubble, a return to the mean, and we're starting to take off again. Okay, we still have a ways to go before reaching these levels. Those levels, but it shows you that we're not that far away. Okay, we're not that far away from those levels. And remember, I've always contended that the peak bubble Bitcoin dominance will be lower than it was last time, and that's basically looking at this channel and realizing that in the grand scheme of things, the dominance of Bitcoin is dropping, and every time it's going up, of course, a lot of the Bitcoin maximalists will say, it's just going to go back to 95%. And I don't think that's true. Now, I do think Bitcoin controls the market. And I think, I'm happy to have a large stack of Bitcoin. I am somewhat Bitcoin light right now. And watching the dominance go down will be a way to systematically increase my Bitcoin stack, because that would mean that the altcoins are doing very well against Bitcoin, and then that's a great time to pick up some more Bitcoin with those altcoin positions, if in fact we're continuing to head in this direction. Now, this is the chart I've showed before, and you can see we have dropped below these lines. At the end of the day, these are lines on a chart. Okay, we can easily adjust these lines to tell a different story. I mean, just to show you, I did this, and it still looks pretty good, even if you draw it like this, right? It doesn't really change a whole lot. But the general idea here is that I think we're at a major crossroads in the market. Okay, I think Bitcoin is at a major crossroads in the market right now, because the dominance has dropped below 50%, which is a pretty big milestone. And if it continues to drop, then I think not only Ethereum is going to be going ballistic against Bitcoin, but also a lot of altcoins could as well. And at this point, we would probably be needing to prepare ourselves for a more massive pullback in the event of a major altcoin surge. If you remember, back in 2017, there was a major altcoin surge, but then in the middle of the year, it pulled all the way back. Okay, so we could be in a similar, something similar now, where we're having a major surge, and then it will pull back a lot at some point, maybe in the next few months, as Bitcoin goes back into price discovery mode or has a major correction. So we need to be prepared for the dominance coming back quickly at the end of this altcoin mania. Okay, so one of the things I want to talk about is how do we sort of wrap this up into everything going on in the market, okay? Some of these charts I've spoken about in some recent videos. Obviously, you guys know this one. It's the total crypto market capitalization, logarithmic regression, and we've looked at our fair value or our undervaluation regions. That's where the best time to accumulate is. We've looked at our overvaluation peaks, and we've talked about the implication of us generally decreasing in terms of where our peaks are in extension from the fair value. And so one thing to consider is we're approaching an area, and we've already actually gone into it, but we're sort of approaching this area where if it's extrapolated from one data point and it works out like that, we could see a pullback in the next, say, couple months. I would say no more than a couple months if we're going to have a double peak cycle, is my guess. So if we don't have a significant pullback by sometime this summer, if we don't have a significant pullback sometime this summer, then the argument for a double peak cycle becomes less and less. Okay, because as we continue to navigate upwards up to, say, this macro downtrend up here, I think we're going to be too far gone at that point to contend of a double peak cycle. We're still very much in the phase of having a double peak cycle now. We could even go, the entire asset class could, I feel like, could easily go to, say, $3 trillion in terms of the entire market capitalization, and we could still have a major pullback and then maybe go up to 10 trillion later on, which is, something similar. We played out a similar qualitative cycle, or the cycle 2 cycles ago qualitatively looked very similar in the sense of dropping down from this peak, having sort of an intermediate peak, and then going back up later. So to me, it sort of feels like we're having this like crescendo, right? We're having a crescendo, and the implication is Bitcoin going to take the reins back, or are altcoins going to continue to dominate for a couple more months? And we also have looked at the idea that historically, Ethereum can rally into the summer. And it's because Ethereum can rally into the summer that often makes the 90-day ROI of buying Ethereum in the summer not that great. Okay, now when I put out this video on the public channel, it was not that well received because, well, I mean, I think some people liked it, but it's easy to focus in on the negative comments. It was not well received by a lot of people because they want to believe that Ethereum is just going to continue to go up forever. But remember, if we stick to the data suggests that buying Ethereum in the summer does not typically yield the best 90-day ROI. A 1-year ROI, 2-year ROI, fine, that's different. That's like you're still probably fine in the grand scheme if you have a macro outlook. But in terms of the 90-day ROI, buying in the summer is not typically the best for Ethereum. We're not in the summer yet, and if history is any indication of what Ethereum can do, we've seen the rally starting in January last through the summer. Okay, we've seen it go into June. Okay, we've seen it go into June before, and so if that happens and this rally by Ethereum continues on for a while, then I think within another month or two, it's going to be really hard for that rally to sustain itself without some massive consolidation period, where at the very least I would think we would need to go sideways for a while. So that's sort of what I'm looking at for Ethereum right now, that hey, we could still have more potential upside in the short term. And I don't even know that 3K is necessarily the local top on Ethereum. I mean, I've said before, I think everyone thinks it's 3K, and I would say it could be 3K, but I also think it could easily be 4K or 5K before we get a massive pullback, and it will depend on if Bitcoin holds the line or not. So the other thing I wanted to sort of briefly touch on, we're going to cover a lot in this video, are these eight 2-month candles. Sorry, this was nine 2-month candles in a row. And we had 1, 2, 3, 4, 5, 6, 7, 8, 9. This was our double peak cycle. Then we had more or less, 5, 6 months where we're sort of going sideways over here before another peak. This cycle is 9 2-month candles in a row. We're in our 9th. And so if Bitcoin continues this and has its 9th 2-month candle in a row, it would assume that the price of Bitcoin would be closing above where it opened the month, and I believe it was around $58,000, where it opened the 2-month candle on May 1st, so this one won't be over until the very end of June, okay? And so that could be a pullback phase in say the entire market if we were going to continue to emulate the 2013 cycle. Now, I want to bring in the stock market into this because the stock market is getting very heated right now. And I don't say that lightly, okay? I don't say that lightly. You guys know me. I'm a stock. I mean, when it comes to stocks, I'm basically just a bull through and through. And I say, I think the stock market is a great way to just, a great place to just sort of grow your wealth and not necessarily grow it as quickly as in crypto, but grow it in the sense of you're protecting it to some degree and you're just sort of watching it go up. And yes, there's going to be corrections, but I don't think these corrections should be feared. I think they should be capitalized on by, quote unquote, buying the dip. Okay, buying the dip. Now, this is the risk metric for the S&P 500, and you can see that things are getting relatively heated. Look at this chart over the last 20 years or so, and we can easily recognize how crazy it has been over the last year. And, some of you guys were linked some podcast or something back in January where, people were calling for a massive crash back in January. And I've said all along, the stock market doesn't just get 40 to 50% crashes every single day or every single year or every other year for that matter. That doesn't happen in the stock market, typically speaking. Doesn't mean it can't happen, but it's not something that you should be constantly worrying about, in my opinion, is this idea of this impending 50% crash in the stock market. However, there can be pullbacks, right? I mean, a 10 to 15% pullback would be substantial, even at 20%, obviously. And at this point, obviously, the bears would claim that they called it, but it doesn't change the fact that they would have been wrong for the last 14 months or so. So with the stock market, if you look at the risk on the secondary y-axis, you can see that there haven't actually been that many times where the risk level gets this high. Okay, so it got this high over here in the 1990s and back in the 1980s, and then way back over here, coming out of the Great Depression, we saw some major moves to the upside. So what I would, and you can see that corresponded with this, really quick move back up to the upside right here. So what I would generally say is that I don't think it would be that surprising at some point in the next few months to see a time where the stock market at the very least is cooling off and it's not going up basically every single week and every single month. Okay, and the reason I say that is just based on historical data, looking at the fact that we are not able to hold these risk levels for very long. Okay, and we're at 0.9 risk. Okay, we're basically at 0.9 risk right now. And if you're curious how I handle the stock market in terms of risk, I'm always buying if the risk is below 0.75. Okay, so if the risk level is below 0.75, I don't even care. I just throw money into the stock market like it's nobody, like it's going out of style. I just put money into these two main mutual funds, FCILX, SC Rocks. If you want to go with large caps, which I sometimes do as well, you can go with FNILX. Okay, so those are the main three that I buy. I also buy stocks. I also buy a few other things, but those are the main places where I put a lot of my money in the stock market. They're mutual funds on Fidelity, and they have 0.0% expense ratios. And again, I've showed you guys the evidence before why funds that have funds that have 0% expense ratios historically actually are better. And that's not to say that skilled managers don't exist. They do. It's just that they're not necessarily worth the cost that they charge you. So that's the general idea there. So a lot of my money in the stock market goes into these two main mutual funds. And in terms of selling, well, I've said this before as well. I don't necessarily think that you need to be selling your stocks when the risk level is high. Now, what I say is if in your life you are you need liquidity, okay? You need liquidity. And you have everything tied up in the stock market or crypto or other places, and you need liquidity because maybe you want to buy a house, you want to have like a down payment or something. The general idea is you don't want to cash out when you're down here at like 0.3 risk, which is where we went back this summer. And I said back then, hey, this is the time to buy stocks. It was a public video at the time, in fact. We did a public video on this risk metric back in March of 2020, and I said, hey guys, this is the time to buy stocks. And now that we're at 0.9 risk, if you were looking for some liquidity, I think that it would be a much better time to get some of that liquidity out of your stocks by selling a portion of them if you need it. Now, if you don't need it and you don't really know where to put your money because maybe you have, you're still making money from your job, or you've taken some profits in crypto and you're looking where to put things, I'm not saying you need to go sell your stocks. I'm saying the purpose, in my mind, of the S&P 500 risk metric is not to say, hey, you definitely should sell, because if anything with the stock market, we know that it just tends to go up over time, okay? It just tends to go up over time, and it doesn't tend to have 85% corrections like crypto does, okay? So when it comes to the stock market, again, I'll reiterate it again, a high risk level, in my opinion, should not necessitate the desire or the idea that you have to sell your stocks, because I don't think it should, because I do think that the stocks will trend up over time. If you need liquidity and you're buying a house, you want to pay off your student loans, you want to go on a vacation, whatever it may be, then taking profits at the 0.9 risk level is about as good as you're ever going to get, okay? It can go higher, and we've seen it go higher. Of course we've seen it go higher. Back over here, you can see it went up to like 0.95 risk about 20 years ago. And so of course it could go higher, but taking some profits now makes a hell of a lot more sense than it did back in March. Okay, so if you want to know what I'm doing, I'll be honest, right? I'm buying some real estate, and so I am taking some profits because I need the liquidity, and I recognize that hey, the stock market is pretty overheated. It could keep going up, but I did take a little bit. I'm taking a little bit off the table so that I can fund these other investments, right? And it's not even investment; it's just a place for me to live, because we still rent, to be completely honest. And that's a whole other story. I think that when it comes to I don't know if you guys want me to get off on these tangents or not, but when it comes to buying real estate, a lot of people say that you're throwing money away renting. I wholeheartedly disagree. I could have bought a house a long time ago, and I just simply have chosen not to. There's a lot of things that come with buying a house that tie you down. If something breaks, you have to fix it. If you if you need to move, then you can't just quickly move like if you are renting. And not only that, is the opportunity cost on the down payment for a house is pretty high. Imagine you put 20% down so you don't have to pay PMI. In that scenario, if you don't have to put 20%, if you're putting 20% down, that 20%, there's an opportunity cost on that, right? If you had just kept that money in the stock market, you would have been doing quite well. So the idea that you're just throwing money away by renting is not necessarily true, because it means that you get to keep more of that money invested rather than throwing a huge lump sum into a house. Now, there are upsides to owning a house, of course. There's the stability of not ever getting kicked out of your rental, which has happened to me before, not because we were bad tenants, but just because they were looking to sell the house. So I would say, when it comes to real estate, and since we're doing a whole market update here, the real estate market is really hot. Basically everything is hot. Crypto's hot, the stock market's hot, real estate is hot. If you're looking to buy a house, in a lot of places, you have to offer 5 to 7% above asking just to have a chance, basically, to get the house. In some places, it can be 20%, like out in California. So that initial number just sort of gets the conversation going. But I would say for real estate, it's a seller's market. Crypto is heated. The stock market is heated. Everything's heated, right? Everything's heated right now. So what I've had to offset some of this risk is I've taken some profits, as you guys know, and I'm earning interest on a lot of stable coins, earning about 8 to 9%, which is pretty good. And in my opinion, that's pretty good. A solid 8 to 9%, a modest 8 to 9%. And it's a way to offset some of the risk from the rest of the market. So that's sort of where I see things right now. The stock market is fairly heated, and we know that things can stay heated a lot longer than we otherwise can imagine. Does not necessarily mean we have to have a 40% crash coming. Okay, does not mean that. But hey, a 10 to 15% pullback, we go back below the 0.75 risk level, and I'm DCAing back in anyways. Okay, so just think about where everything is right now. The stock market's heated, crypto is heated, real estate is heated. Everything's basically just going up right now. We know these can stay like this for a long time. I think real estate's going to be heated like this for another couple years, in my opinion. There's a national shortage on real estate, and there's been a lot of people calling for a major real estate crash for the last year. It's all over YouTube, all these experts. And I've said before, there's really no evidence. And I've said this 6 months ago in the Telegram channel, and probably like 10 months ago. There's no evidence that the real estate market is about to crash. If anything, the evidence points in the other direction. Okay, a lot of people like to compare it to 2008, but this is very different than 2008. 2008 was essentially, it was more than just a supply and demand imbalance, okay? And so with real estate, I really do see it staying like this for a couple more years. And the implication back in March of 2020 and April, when people were calling for the next housing crash, was that people are going to have to liquidate, or they're going to have to sell their homes, or they're going to be foreclosed on. The difference now, between now and 2008, is that now there's so many investors that are there to just scoop up all these properties. Okay, they're just there to scoop them up. And you couple that with the fact that there's sort of like a housing shortage, prices are skyrocketing. Prices on real estate are skyrocketing right now, and I don't see that changing I don't see that changing in 2021 at all. Okay, the spread on the basis points is very low as well. I really do not see this changing in 2021. I think it's only going to get worse, probably, in terms of it being a seller's market and not a buyer's market. So real estate, it's a seller's market. If you have real estate, obviously you're doing pretty well. if you're selling some of your properties, or if you're renting them out, you can pretty much get top dollar right now based on the demand. When it comes to the stock market, we can see from this chart, it's really heated right now. And I'm not putting money into the stock market right now. I recently took some out to provide some liquidity so that I could buy some of this real estate, because we're moving in about a month and a half. And so that's sort of where I see things. Taking a little bit out here to get the real estate, so that we can buy that house. And then you go look at crypto again, right? We go look at crypto, and we know that things are very heated. And this is why I'm saying, it could still be a double peak cycle. This could still be it could very much still be a double peak cycle. And I think we could go to even say 3 trillion on terms of the total market cap, and easily still be within the realm of a double peak cycle. Remember back in 2013, it wasn't until after it was the 10th 2-month candle that actually had a pullback. And we're currently still in our 9th for Bitcoin. So even looking at this, I say, hey, Bitcoin could go to $70,000 or $80,000, and we could still be potentially in a double peak cycle, because I do think the Bitcoin will peak out somewhere between $100,000 to $200,000. I tend to say around 140. That it seems like a lot of my analysis brings me to the conclusion of 120 to 140. I lean more towards 140 because there's a lot more of the indicators say that 140 seems to be theoretically possible. But again, I said before, between 1 to 200,000 is definitely possible, in my opinion, this market cycle. But that doesn't mean we're going to go straight to it without a correction along the way. So what I want to do now is I want to talk about, I want to look at the market here. Okay, I want to look at the general market, and we look at the Ethereum Bitcoin ratio, or the Ethereum Bitcoin valuation, and I'm just looking now and saying that it's at 0.0522. So I guess I just rambled on for a really long period of time there, and you can see the market has actually changed a lot. All right, we're at 29. I might have to do a live stream soon. We're at 29.70. But remember to keep an eye out on the risk levels. Okay, so I'm gonna pull up the risk levels really quick, and we want to make sure we understand where things are. Okay, so Ether Bitcoin now is at 0.598, and I think a lot of people, and me included, assume there's a really high probability that it peaks out up here and comes back down. Okay, I think there's definitely a probability that happens. Now, if that happens, if it comes back down, then I think we might have enough juice to do one more run later this year, maybe before Q4 bleed, and then we continue to repeat the process. I think there might be enough juice to potentially come back up to the top of the channel sometime this year before the historical Q4 bleed of the Ether Bitcoin valuation. So I would say, hey, if we get rejected and we just keep making the same move, then I think that could still happen before the historical Q4 bleed. However, the other thing to consider is, what if we don't get rejected? What if we don't? What if we break out? And I'm not trying to say that we have to break out or anything like that. I'm just saying, what if it happens? If we operate deterministically and assume that it can't happen, then we might be missing the full picture. What if it does happen? And what if we do break above it? This would cause, in my opinion, not only Ethereum to surge, which, obviously the implication will be Ethereum surging. I think it would cause a lot of altcoins to move as well. Look at the market. Look at this market. ADA, by the way, if you guys have ADA, go stake with the ITC stake pool. That's my stake pool. ADA's been consolidating for a couple months. DOT has been consolidating for a couple months. Link has been consolidating for a couple months. Look at DOT. A lot of these coins have been consolidating for a couple months. So if Ethereum breaks through this, I feel like, my guess, again, it's hard to know what's going to happen in the short term, but if this were to happen, my guess is that altcoins would really pick up. Okay, and so I think people need to be prepared for that. So one thing we know is that Ethereum's valuation against Bitcoin does not tend to move sideways. Okay, look at this. Look at this chart. It does not tend to move sideways. It's usually either going up or down, right? It doesn't tend to move sideways at all. And so if we extrapolate that and say, okay, it's either going to go up or down here, and let's rule out sideways movement. Like, let's rule out this path, okay? Because I don't think that's a very likely path if history is any indication. I feel like it's either going to go up or down, not sideways. So let's rule that one out. So if it goes down, then that likely means either Bitcoin's back in price discovery, or Bitcoin is having a major dump, maybe back down to the 20-week, maybe below the 20-week moving average at this point. I mean, we could be too far gone to hold it. We didn't hold it in 2013 when we had a double peak cycle, so we have to consider that a possibility. So if we go down, it probably means Bitcoin's back in price discovery, and not just like 58, because I mean, the last several times it's gone into price discovery, it just increased $3,000, right? It went 58K, then 61K, then 64K. This is not that manic price discovery. If Bitcoin goes into manic price discovery and the price of Bitcoin goes to like $70,000 or $80,000, rest assured that the Ethereum Bitcoin valuation is likely going to be plummeting. Okay, likely plummeting. And to give you an idea of how far it could plummet from these levels, I mean, it could be 33%, at least 33%. Okay, so you have to consider that as a possibility here. And that's why I keep saying, you know, if you're super Ethereum heavy, like if you're 70%, 80% Ethereum and you don't have any Bitcoin, we're at the range now where maybe converting a small amount, a token amount, might not be the worst idea. Okay, the downside are the tax implications, and I try to do my best to discuss things from the tax implication point of view. Not everyone has to worry about the tax implications. If I didn't have to worry about the tax implications, I probably would have already converted some Ethereum to Bitcoin. But I really don't like making these trades if I don't have to, but I should also phrase my analysis in a way that is useful to people that don't have to worry about the tax implications. If you're like 70, 80% Ethereum, and you want to maybe take 10%, 10 to 15% of your Ethereum and convert it to Bitcoin, I feel like at the top of the channel, this is a pretty good time to do it, generally speaking. And you might say, well, Ben, why don't you convert all of it to Bitcoin? Because then then if it comes back down, well, the reason, of course, is because we don't know what's going to happen. And if you want to do a dynamic DCA, then it could be, you know, converting 10% of your Ethereum back to Bitcoin here, and if it goes up to the next risk level, which let's go see what it is. So we're currently at 0.598 risk. So the next one on the Ether Bitcoin valuation would be 0.7 risk, which corresponds to about 0.075. So in order for us to get there to 0.075, we would need to go up to, and remember they are dynamic, we would need to go up to this level. So it could be 10% here, 20% here, okay? And then if it keeps going up, right? If it keeps going up, the next one would be 0.8 risk, which would be around 0.1. Okay, this would be around 0.1, and in that instance, you'd be looking here. So then that way, if you dynamically DCA it, you do 10% here, and then if it goes down, at least you took some profits back to Bitcoin. You protected your downside risk. If it continues to go up, 20%. If it continues to go up, 30%. And so that's how you dynamically DCA and sort of mitigate some of your risk as it continues to go higher. Okay, and the reason why I think there's at least a non-negligible chance that we see something like that play out is because look at all the altcoins. I mean, look at all these altcoins. They've just been going sideways forever. And what I think is happening, what I personally think, is that we know when Ethereum makes a move, it steals the show. If Ethereum's moving, the altcoins generally are not. Of course, there are some that are, but a lot of the ones we follow haven't had significant moves in 2.5 months. Cardano, Polkadot, Chainlink, they haven't really done a whole lot let's be honest, they haven't really done a whole lot in the last 2 to 2.5 months. And so right now, I feel like they're not doing a whole lot because Ethereum's going crazy. And we've said this before, when the Ethereum tsunami hits, altcoins will likely watch it all. And we said this for months, and now what's happening? Ethereum's going crazy. A lot of altcoins are watching it all as money pours back into Ethereum, and there it is. Okay, money's pouring into Ethereum. It's trying to make a run at 3K. And imagine, I mean, I would say there's a decent chance we get rejected and we head back down. But imagine the euphoria. Imagine the euphoria in the market if Ethereum decisively broke up and went to say 0.06 or 0.07. I mean, like, imagine what that would be like. Because also we also have to realize too that if you look at where we launched from, this was the same thing, the same place we landed after a major drop from 0.085. So I know it sounds crazy, and the chances that it plays out are probably relatively low, but if everyone operates deterministically and assumes that we have to drop back down, then that might cause them to FOMO back in if it continues to go up. And the best way to mitigate against that is to just simply not sell all your Ethereum, to take some profits like this, 10% maybe back to Bitcoin, to take some profits in the event of a correction by the Ether Bitcoin valuation, but to leave enough on the table so that, hey, you're still riding it up. And the other thing too is I did not take profits here. And I said back then, I think the Ethereum Bitcoin valuation, or the risk level, we just run 0.59, 0.595 or something like that. And I don't regret it, because again, for me, it's a taxable event. So I converted a lot of Bitcoin to Ethereum over here, and if I can take off 10% off the table up here, I'm happy to do it. Now, what I'll probably do is I'll set a stop limit order. Like, I'm not just going to identically sell, right? You know, I don't have like an order placed right now, but I would likely just set a stop limit. And if you go look at it right now, it would correspond. Let's see where 0.6 risk is. It would correspond closer to 0.053. So probably around 0.0526, 0.0527 is going to be the 0.6 risk level. And right now we're at 0.0522. So we're really not that far away. So two main options here, right? Bitcoin dominance goes up back to like 60% or something, or maybe we drop like a rock and go to 40%. If we go back up, then taking some profits off the table, right, in the situation like this, back to Bitcoin is going to protect you against some of that downside risk, but leaving enough on the table to take profits, even more profits, over the next month or two might not be the worst idea either, if that were to play out that way. So if you're new, and or if you're like me and you have stablecoin positions and you'd like the opportunity to buy back some of these altcoins, you would hope that the dominance of Bitcoin falls, okay? Because if the dominance of Bitcoin, or sorry, you would hope that it goes up. So if the dominance of Bitcoin sort of turns around right here and goes back up, there's a decent chance in that situation that altcoins aren't going to be doing so well, and that could be a great time to come back into the market, okay? To come back into the market, or to establish larger positions than the ones you currently have, and so that's what I would say. If the dominance drops like a rock and we go down to like say 40% or something, this is going to present a crazy opportunity for everyone, I think, here in altcoins to make some major gains in the market. Make sure you protect those gains, take profits along the way, put them into something safer, maybe even Bitcoin if you want to maintain exposure to crypto. Don't squander a major drop in the dominance. And so, like, if you see all your altcoins skyrocketing, don't squander that opportunity. I've seen so many people squander it. This would be like profit taking territory, not FOMO in territory, right? Profit taking territory. So that's what I think that's what you need to be looking for in that situation. Okay. I think that probably should wrap it up. We've covered a lot. I wanted to do sort of like this major market update because of how everything is right now, and recognizing that Ethereum Bitcoin still looks pretty good right now, and we're coming up on the point where I would personally think about taking some profits back to Bitcoin. But we're not quite there yet, right? We're almost there. I mean, it's funny because we've moved more than that. When I started this video, we were not even close to 0.0523. I think we were below 0.052. We were like 0.0519, and now we're already at 0.0523. So it's moving up relatively quickly. So let me go ahead and get this video out so you guys can watch it before it becomes obsolete. That'll wrap it up. Thank you guys for tuning in. I'll see you next time. Bye.